Hi everyone, I'm Chad Shoop, and one of Warren Buffett's favorite characteristics to find in companies is that they have moats around them. They have these competitive advantages that make it difficult for competing companies to come in and replicate what that company is doing successfully. So today I have one stock that has these moats around it. It has several moats, and I'm going to focus on just one today, but it has many moats around its operations that help deter the competition that's coming its way, and the stock is Tesla. So they make these electric vehicles, and they've only been around for 2 decades, yet they're going toe-to-toe with many of the major automakers that have been around for almost a century now. So this stock, this new, basically a startup company, has made its own way in the automobile market. And it's, like I said, it's one that Warren Buffett hasn't invested in yet, but it has many moats around it. And one that I wanted to talk about today was its brand. So Tesla is now synonymous with luxurious vehicles in the automobile market. It's on the same level as Cadillac, Jaguar, Porsche. When you look at a Tesla, you think that same kind of quality and those characteristics because it comes with state-of-the-art technology. It comes with full service, great warranties. These are great cars that are rolling off the lots. And the work that Tesla has put in to make their brand synonymous with luxurious vehicles is incredible. They've been able to achieve higher price points for selling their cars. But when Porsche and Audi recently tore down the Tesla Model 3, which is their mass market lower entry price for the Tesla, when they looked at that, they realized that they were going to struggle to really produce a car of that quality and at that low of a price. So it really made them backtrack on what they were trying to do, and they're going to have to come at it a different way to jump into the electric vehicle market. And I have a personal story for you. Last year, I was car shopping for a new car, and my wife really wanted a Cadillac Escalade. Now, I'm a cheapskate, so we were looking at a used Cadillac Escalade. It was around a 2015 model, but for fun, I wanted to compare it to the Tesla Model X, which is their midsize SUV, and I wanted to compare the price to own it over a 10-year period. Because, well, with the Tesla, you don't have to get oil changes, you don't really have to change your brakes that often, you don't have to go through the regular maintenance that you would when you have a gas-powered vehicle versus an electric vehicle. So you really save on a lot of those ordinary routine costs that you have when you have a gas-powered vehicle. Plus, you don't have to spend all the money on gas. So I did the math, and it turns out that the brand new Tesla Model X that I liked would have been basically the same cost to own over 10 years as roughly a $50,000 Cadillac Escalade. So the difference between the two is basically $50,000. So the Tesla Model X cost $50,000 more than the used Cadillac Escalade I was looking at. Now, when I ran it through the analysis, that $50,000, wow, it sounds like a whole lot of money. Over a 10-year period, it's really just a little over $400 a month that you're saving by going to an electric vehicle versus a gas-powered vehicle. Now, I drive almost that much in a month to where that's my gas payment in a Cadillac Escalade versus not having to pay gas in the Tesla. But when you factor in all those other things, that's how you get to where you can save that much money over the 10-year period to make a $100,000 Tesla actually fall more in line with the top lines of lower car makers such as Ford and such as Honda. Their Ford Explorer, when you get that all decked out, it's around $50,000. Same with the Honda Pilot. When you get to the top of the line Honda Pilot, it's around $50,000. Now these are gas-powered cars, so over a 10-year period, the Tesla actually comes out as about the same value, even though it costs around $100,000. So there's a big discrepancy there that the Tesla is being valued as a luxurious brand, and instead it's actually priced around the same lower end automobile makers that exist. It's not on the same level as Porsche or Jaguar. When it comes to price, it's actually on the level of Ford and Honda. So that's an incredible bargain for this stock, and it's really going to be a moat that a lot of competitors are going to face as they try to jump and ramp up their electric vehicle production in the near future. That makes Tesla stock a great opportunity to invest in today. Even with all the volatility that's built around it, it's going to be a great company for years to come, and these moats are really going to help it strive in the future. That's all for my video today. Be sure to view the link below this video to get my full article on Tesla and on the moats that are around its business. Until next time, I'm Chad Shoop.